And it's crazy. Everybody wants to play those rally up, but if you're smart, because what's telling you, Dave, is might as well own gold. But 80% of the time, might as well own just gold.
We're taking a look at the charts again this month with Patrick Karim from NorthStarBadCharts.com. Patrick, welcome back to the channel.
Dave, it's been a short while, but yeah, always great to catch up there.
It's always a pleasure having you on. You always have a slightly different take on the charts or a different lens through which you look at it. It's probably been about 3 months since we've spoken, and a lot's happening in those 3 months. We've seen gold literally in the last couple of days close at an all-time high. Where are we going to go from here?
All right. Well, I'll share my screen, so let's give your viewers the dirty stuff there right away there. Closing above an all-time high, it's not too much of a signal, but you got to be careful because, above all-time highs, and often that could be the top, right? Because when you're close to an all-time high, that could be actually a resistance point, creating a new swing high, and then everybody gets trapped, then it swings low, people give up, and then goes up. So what's more important, well, okay, I'll zoom out. I'll do it real fast, guys. I'll just zoom out. Here's the yearly chart for gold. So back in 2020, we had a yearly close above all-time highs. Then it went sideways for a couple of years. And last year, we had a confirmed pull flag continuation breakout for gold on the yearly chart. So that's in the books. It's done. I'll go down to the 6-month chart. 6-month chart, same thing. So you see more granularity. Beautiful pull flag, explodes above all-time highs, traps a lot of people, but then for 6 months, 6 months, 6 months, 6 months, 6 months, it goes sideways. And after that, you could even make a case that I don't know which of these two is the breakout candle, but either case, it's continuing, it's breaking out, right? And this is the measure, this is the move, the pull flag out of the base, the energy that goes in, gets capped, and that's the energy release. So it all depends. Is that a wedge here? But a conservative target right now for gold is 2,600 on the log scale. So that's in the bag.
What type of time frame are you thinking about that? If you said like 2,600 is the target on that?
It could be fast. Usually it's the angle of ascent. So let's say I take this. Now I zoomed in on the quarterly, but hold on. Before we close, I'll show you the bad news though for gold. There is bad news.
Okay.
Here's the angle. So usually that could be the same angle replicated out. So we're talking about early 2025, Q1 2025, something like that. If it keeps, doing the same energy that went in. So here is the quarterly, and the quarterly had an aggressive inclining, beautiful, bullish, expanding megaphone. So often these people say it's bearish, but not if it breaks out to the upside. So that thing confirmed breakout. It got a lot of people scared as this was a little lower, it went all the way down here. See, that's the wick at the beginning of the quarter,
so
but now it's just rocketing upwards, right? So that you could consider that almost a back test. So if we close March, this candle where it is now, oh my goodness, that's bullish because you've added the back test here and then off it goes. And again, measured move. I'm going to be repeating myself, but it's bonkers, Yeah, another target all the way up to 2,800. It's a range. And that's how you set up targets, guys. It's not just one chart. It breaks out. It's a whole range of charts, of different chart patterns. And then after that, you kind of get a scatter chart area of a ballpark of targets.
Sorry, are you still cautious on this, or are you bullish on it now?
Well, nominally, if you tell me just look at the gold chart and I'll leave it on the monthly, it's all steam ahead, right? It's like it's broken out here, also on the monthly. It's broken out and back tested on the monthly. It's broken out on the weekly. I'm going to zoom in on the weekly. It's like it's done everything it had to do, gold.
And this is what you've said in the past all the time. You can't just look at a daily breakout or a weekly breakout. When you're going to get a long sustained move, it's when you get the yearly breakout, the 6-month breakout, the quarterly breakout, the monthly, the weekly, and then the daily as well.
It's had all of them. Look, this is the weekly continuation breakout there. It's like, bam, beautiful back test, explode upwards. So all that's in the books. I'll show you the bad news for gold. and then I'll show you a little bit more of good news. Okay, GC gold. Oops. GC gold divided by SPX. It's it's bad news, but it's not terrible news. So here's gold versus SPX. So you have a breakdown for gold versus SPX. It happened here. I'll bring you to. I'll put on monthly chart, monthly, remove indicators.
So this is gold in terms of the S&P, basically, is what
Yes,
you're saying. So you look at gold against the S&P index. This is what we're looking at here.
that's right. Use the spot gold, get more data. So in a true bull era for gold, in a true bull era, you have to, like here it did in the 70s. Well, of course, gold, they unpegged it, but it outperformed here the US equities in the 2000s. There's a bottom here. You're outperformed. But look, that's not what's happening now.
Mm, mm.
So it's going up, and what's important because the miners track this ratio chart, and it hasn't broken out. Now I'll show you. I'll overlay gold just to tell you that while this is not 100, it's not bullish for the miners yet or silver. Look in June of 2019. So here I overlaid the gold chart when it broke out in June of 2019, right here. June, May, June, right here, June of 2019. I'll bring your attention to gold versus SPX down here. It hadn't broken out versus gold versus SPX there. Not yet, but it was turning a corner, right? It was right.
Yeah.
You see that? It hasn't broken out. Gold continuing what it's doing now is kind of front running that we've possibly at this area here.
Okay.
And this could be a false breakdown for gold versus SPX, and it's going to really try to rip upwards. It's going to do a false breakdown and then move back up. Why that's important is for everybody that's playing the miners and stuff like that, because the miners will react to gold outperforming SPX. The capital flows will go in the precious metals complex. Silver is going to do great. So that's getting me pause. But goodness, just the price action on the gold chart is just phenomenal.
But just looking at before you leave that chart there,
Sorry.
I mean, what you're seeing also historically is that the gold S&P chart has always led the way. So what we're seeing is we're seeing a breakout in gold to the upside at this moment in time, and that just has not been reflected in the gold versus S&P chart as of yet. But that it may do if this is confirmed as a false breakout to the downside. And we see that turning around there. And you're suggesting then that if that does break out on that is that lends more to the bullish case for gold short term.
That's right. So yeah, you explained it brilliantly. That's exactly what's happening now. So from a weight of evidence approach, the miners and all that, you want to wait for that to break out. I'll show you a slightly more bullish macro view for the precious, for silver in particular. Silver is going to track this very well. This is the remove indicators. This is gold versus CPI. So that one's looking more bullish.
Okay.
Probably somebody could probably call this a head and shoulders bottom. It's really breaking out versus CPI. And this is important. I'll zoom out. Because also this looks a lot like the gold versus SPX, but more in favor of gold. Right now, this is way more bullish, this construct. I'll overlay silver, and I'm sure the people familiar with the silver chart. Put down log scale. That's practically the silver chart, Dave.
Right.
Practically.
That is.
Like I'll zoom out historically. Yes, there was but look at that. Look at this thing there. Look at that thing.
That's a very strong correlation, isn't it?
Yes. So
explain then exactly we got gold versus CPI. Explain exactly what that is, though, for people watching. They may not be too familiar with it.
Yes. So it's gold performance versus inflation. So sometimes, gold tracks the purchasing power. So it's the US dollar adjusted for inflation. That's what gold tracks. But then after that, when you adjust, is gold able to outperform inflation? So let's say we're in a new inflation cycle, and gold, it's a smart metal. The market participants are pretty smart. So if people think there's going to be more inflation, which is going to destroy more your purchasing power of the US dollar, gold's going to start front running that and keep outperforming inflation. So it's going to make that thing go up. There's more inflation. or more destruction of purchasing power, and gold outperforms that until gold is not able to outperform inflation, which means inflation is keep going up and the crowd piles in when inflation is super high, but gold's already breaking down versus CPI because the market participants are pricing gold lower because of future anticipation of destruction of purchasing power will be less, and that traps everybody, right? Because remember when inflation was super high, everybody thought it'd go to the moon, and gold was already faltering versus, look, even here, look at the exact peak. I'll zoom in here for when gold peaked versus CPI, everybody here was piling onto gold, but it was breaking out that momentum. And look what gold did versus CPI. It went nowhere there for that consolidation. But now it's changed. So you got to expect that silver chart. Goodness,
Mm.
it's begging to break out. You can't front run it, but this is so. Look, in the precious metals complex, the big daddy is gold. Gold outperforms it's gold's number one. Once gold breaks out versus CPI, silver says, "Okay, my turn, buddy." Gold's opening the gateways, and the miners, while they're third, they're pretty terrible over very long periods of time. They've always underperformed gold. I could show you this real rapidly. So this is the ASA chart, the precious metals miner, and that's why it's not playing somebody trying to play the miners. They're not playing the odds because reset chart. This is the miners since 1968 priced in gold.
Yeah.
You're not playing the long game here.
Massive underperformance.
Yes, because what people are playing miners, they're trying to trap these bear market rallies. That's what they're trying to trap. So it's spending more time down. You see these arrows, it's spending more time flat and down than up. So from a statistical perspective, trying to play when that goes up is a loser's game, right? If you go to casino and on the probabilities and you play this game I'm showing you 1,000 times, you're going to lose. The odds are not even 50-50. These stretches down are way longer than these stretches up. And it's crazy. Everybody wants to play those rally up, but if you're smart, because what's telling you, Dave, is might as well own gold. 80% of the time, might as well own just gold. Stop getting greedy with 10,000% moves. Just own gold. That's what that chart's telling me. So, but there is a trader's opportunity eventually, but you're gonna have to time it. And because of this huge downdraft of overhead pressure versus gold, the rallies they're gonna get rug pulled. It's happened.
Yeah, but
never.
Do you think that though that there's an opportunity here soon? Because ultimately, if you're projecting 2,600 on gold, that has to be reflected in the miner's price at some stage.
Only if gold. So here I'll do XAU USD divided by SPX. So that's gold versus SPX, and then I'll overlay the ASA chart. So you'll see how it tracks. Look, and it tracks. Put the log scale here, logarithmic move indicator of remove drawings. Okay, so here's this one here is gold versus SPX. Here is the miners, and you could pretty much see the ebbs and flow over time.
There as well.
Yes, you see here. So the miners, you can't touch it until gold breaks out. So gold's going to be much higher here because gold broke in 2019, broke out, but it wasn't breaking out versus the ratio. See, the miners only went bonkers once gold break out. The miners went bonkers. So there's probably this line here. So the miners are probably going to do very well once gold is worth 0.43, 0.45. It has to really, and that's when the miners, that's your chance to play the miners are up here, I would say. Somewhere up here, that's the have fun with the miners, guys, until we hit resistance here. And then it's probably time to take a pause, So there will be a move. It scales in time, until it breaks out because.
Yeah, it's a good one for us to keep an eye on. Now, you touched briefly on silver. Would you just pull up a chart of silver there as well? Because we've got a lot of people who are interested in silver, and they're looking to see if the move that we've seen in gold, because gold's at an all-time high now, on a closed basis anyway, in dollars and every other currency nearly. That obviously has not been reflected. We can see what the all-time high was back in 2009, 2010, that massive move. We're still at effectively 50% of the all-time high at this moment in time. So there's a lot of people who are very closely watching this metal for a breakout.
But that's the trap, guy. That's the trap. It's like a fallacy. Oh, it has to catch up. I used maybe in my earlier when I started exploring the precious metals complex, I had that mindset. Nothing has to catch up.
Hmm.
If there's a delta or like a crocodile jaws or whatever, people know they love overlaying two charts and they say, oh, it has to catch up. They put an arrow. That's the trap. Because if silver was really supposed to track gold, it would look like the gold chart. It's like, think about it. But I showed you the gold adjusted for CPI. That's what silver tracks, no matter
Hmm.
what the price of gold is. Gold could be at 10,000. And if it's not able to outperform inflation, silver will still be wherever it is now. It's, it's like if the chart of silver isn't tracking gold and it's not at all time highs like gold is, you got to ask yourself, well, maybe it doesn't track gold. And why would I expect a different behavior? It's being almost irrational thinking that you're expecting a catch up when it should have done it. Market participants are smart. If there'd be a catch up to do, don't you think there's an arbitrage play and it'd be priced already at that price?
Hmm.
Right? It's kind of weird, to think it's coming.
So,
So that,
so what you're saying is
yeah,
that if we want to, we're as well off looking at the gold versus S&P chart in order to get the breakout and the directions on the silver market, then you're nearly looking at the silver chart on its own.
gold versus CPI for silver,
CPI,
gold
sorry,
versus
CPI, yes.
SPX for the miners.
Yeah. Okay. So gold versus CPI for silver, gold versus the S&P.
But you could just look at this chart also and just like, let's say you didn't know the gold to CPI chart is. If you, just wait until this line here right now is going to be pretty valid. It's like really it's had one, two, three. That's a valid trend line. So once we break close above 25.50 or
Sure.
something, it's going to rocket to 28.
And then
Rocket.
and then you're going to find a little bit of resistance there at that
Yes.
28 because you've got the congestion that goes back from the kind of 2010, 11, 12 era as well there.
Right.
So that resistance. So if we get through that, then we're pushing on to the next level of resistance, which is probably in the 34.50 area there, something like that, 34,
Yes. Up here.
35.
Up here. Yep.
And then above that. So there are key points to look at there. And then 50 is obviously going to be a big one.
Yeah.
It's the psychological. It's the previous all-time high. It's going
Right.
to be significant resistance at that
Oh,
point. Then
I'll tell you, the most important resistance is not the all-time highs. It's 28. I'll show you right here because the all-time highs, it's psychological, but we didn't stay
mm,
there a long amount of time. So where we stayed a longer period of time, like I'm just going to do it this way here.
sure,
Uh, I'm going to hide here, replay here. Look here on the right. It's going to show up soon.
yeah,
My volume profiling, it's loading. It's loading these three little dots. You see here, that's the volume transacted in this top here.
yeah,
That's the wall. So
sure, okay,
that's why once you get above that 33, 35, it's like, it, you know, it might slow down. There might be some profit taking at all-time highs, but it's not as meaningful a resistance as overcoming that 28 to 35 area. That's going to be something truly. Hey, imagine us talking about silver breaking above 35. Like, goodness, man, that's going to be crazy. Right? I think it's like I've been
been a
talking
long
about
time. It's
this.
been a long time coming, Patrick.
Ah, man, since 2020, like that's 4 years, man. I've been doing this chart that's been going sideways and I've been trolled forever. But goodness, that level 28 was identified a long time ago. We knew about that $28 level.
You have been saying it over and over again on this
Ah,
channel.
yeah, it's like it's one of my earlier charts. Even when the silver broke out back in, I'll show you guys just real fast there. Here, I put in my highlights. Let me just find it real fast. Scrolling down the memory lane. Here is my silver chart. Yeah, look at this one. This one I did in August 6th of
Wow.
2020. Silver hadn't even started. It didn't even hit. Like, it was just approaching. And I said, everybody's looking at 48.50, but there's a wall here, a yearly defined wall at 31. And guess what happened since then? We just, that wall contained the price action. Since then,
Bumped off it and haven't got through it.
we
Really.
did this, we did this roadmap. Now everybody's looking here. So we've done
Mm.
and that's okay. If it would have broken out, I would have said, good. Now we have a breakout. That 31 is now support, but it's going to be resistance until it becomes support. And that's all we could do. Just make beautiful charts and just wait for that to happen. Goodness, man. Ah.
And when that starts to unfurl, we'll have you back on the channel. But for now, Patrick Karim, North Star Bad Charts. Thanks for joining us.